Today, you are going to learn why the majority of business loans get denied and what you can do to have the best chance of getting approved. Look, a lot of the reasons, almost all of the reasons that business loans get denied are completely preventable if you know what lenders and credit issuers are looking at. There's secret credit reports they look at. There's all kinds of information about how your business is structured that they're looking at and much more. If you know this and how it works, you have a significantly better chance of getting approved for the most money at the best terms. But if you don't know this, it will account for the majority of why you are denied. So if you've been denied before, if you're frustrated with trying to get the capital that you need and not being able to get it, if you don't even bother applying for a loan, credit card, or credit line because you think there's no chance of getting approved, then you're in the right place. We're going to decode this all today and teach you exactly why business loans get denied and, most importantly, what you need to do to get approved. Let's dive in. So a lot of reasons that business owners get denied, and a lot of business owners struggle with this. Although it didn't pull up any statistics right away, a lot of people ask this question of why I can't get a business loan. And if you feel that way, you're not alone. Okay, the last statistic I looked at this is 89% of applications at big banks get denied. So think about that. You know how much paperwork it takes to even walk into a bank and apply for a business loan? You know how many people never even bother because they think they're not going to get approved? And of the people that are confident and think they will get approved, nearly 9 out of 10 of them are denied. And the crazy thing is, for completely preventable reasons. It's not oftentimes the things that you think about. And it's more important now than ever, as banks did tighten up through COVID, that you get a lot of things right, because if you don't do this, then again, during this pandemic, the chances of getting approved dramatically dropped. And if you don't have your business set up the right way, then you really stand to be a victim to that. So even though banks are tightening the belts, when it comes to small business lending, there's a lot of things you can do to increase your ability to get money. And there's still a lot of things that you can types of financing you can get as well. That even if you have bad credit, even if you are a startup business, even if you're a nonprofit, there's a lot of options if you do this one thing. The key to do everything with approval is called fundability. You've got to improve fundability. You've got to increase the fundability. If you do this, then this gives you the best chance of getting approved. Having strong fundability probably encompasses way more than you think it's going to. But when you figure this out, this is the key to actually coming in and getting approved. So when we talk about fundability, a lot of people say, what is it? Well, it's everything that lenders look at to determine whether or not you're going to get approved for a loan. Look, what happens is when you apply for a loan, a whole lot of things happen behind the scenes that you're not aware of. Reports are being pulled about you that you don't even know exist. They're being pulled from agencies you don't even know exist. The lender is doing checks on all kinds of pieces of data that you don't even know they have. They're sharing information with other institutions you don't even know they're sharing with, all of which we're going to decode by the end of this training today. Okay, and they're looking at things you never even imagined that they're looking at to determine if you should get approved, how much you should get approved for, and the rates and terms you pay. And if you don't know this information, then it's just luck of the draw of whether you're going to get approved and what rates you pay. But if you really consciously want to have the best chances of approval to get the highest approval amounts and the best interest rates, you got to understand their secret formula. If you know what they're looking for and how it all works and know the whole system, it's like an open book test. It's like the lender saying, here you go. Here's everything that we look at regarding your fundability. If you make sure that all of this is in line, we're going to approve you. And if any of it's not, then we decline you. Today, we're going to decode this. You're going to learn everything that you need to know about fundability to have the best chance of getting approved. Now, we talk a lot about business credit. That's part of it. We'll talk about business credit today as well. But fundability is a lot more than just business credit. It's any number of different things, many of which you've probably never even realized before, that could affect your ability to get a business loan. Look, more than half of business loans are denied for nothing to do with credit, nothing to do with revenue, nothing to do with your taxes, the bank statements that you're actually supplying. So again, it has to do with things that you probably don't even know about that I'm going to disclose before the end of this training today. And when you fix those things, your revenue, your credit, all those things aren't as much of a factor in the denial as you think they are. You'd probably be shocked at how many approvals you're able to start getting. So imagine you're a lender considering a business loan. The obvious things you're going to look at is the personal credit score, right? The business credit score, the sales of the business, the gross profit. When we think about getting a loan denied, this is the stuff we think about. My credit wasn't high enough. My business credit wasn't established. I didn't have sales. I didn't have enough profits. My tax returns didn't look good. This is the kind of stuff we think is getting us denied. But again, in the vast majority of denials, it's not caused by any of this stuff. Okay, it's caused by everything to do with fundability. They never even get to this stuff before they're issuing a lot of the denials. Jansen, my favorite loan broker whisperer, is with us today. Chris from YouTube, Juan from YouTube, thanks for coming in. Jansen, if you love Ty and appreciate him and his consistency, smash the like button. I appreciate that, Jansen. Please do. If you get value from this, if this helps you, hit the share button, hit the like button, hit the love button. It lets the social channels bring more people in and get this important information. I appreciate that as well. Ladale, hello from YouTube. It's good seeing you. Watch Out Media, good morning from YouTube. Or Ladale from LinkedIn is tuning in. I got people from Facebook, LinkedIn, YouTube, and Periscope with us today. So what do lenders look for when considering fundability? Well, here are some of the things that might not be as obvious as income, credit score, etc. Whether your business name is listed the same everywhere online. One of the biggest mistakes business owners make. Do you have a professional website? Whether your business email address has a URL that matches the website. Even the timing of when you apply for the loans. Not to mention all the secret credit reports that we'll dive into today that they're actually using to access information. So how do you build strong fundability? Well, there's a few things that you can do to help lenders see you as basically being fundable. And it starts with how you set up your business initially. Some of this stuff I've talked about before. Many other things we've really rarely ever dove into, which is what we're going to do today. So it has to be set up a certain way. Your business structure, your business, every aspect of what's on an application has to be set up the right way. If it's not, then you're just not really bankable. You're not very fundable. So each step is vital. And if you miss one, even one, then a very good chance you can get denied. So for example, if you use a home address, Amazon will approve you for a credit card, but Walmart won't. And that's what we talk about today. What I'm going to give you is the overall formula that if you meet this formula, you're going to be able to get massive approvals on credit cards, credit lines, and loans. Now, if you miss a step and you don't do part of this, some sources still may approve you, but many others won't. Just as I mentioned with the address. So for example, Staples is really big on you using a business phone number, okay? You can also go to, Quill, which also sells office supplies. They don't really care. So some of these credit issuers really care about certain aspects we'll talk about. Some don't. But by making sure you get them all in line, that's the key to being able to get the most money because you're meeting this checklist that all these credit issuers have. And it's not even them manually checking it, it's their computers checking for this information. So the goal is to make your business a separate, standalone, fundable entity from the owner. It's for rule number one. Let's start right here. And to remove any doubts that it might not be. So think of it like this. When you have an opportunity to create a perception that lenders and credit issuers have about your business, you can do this. Now, you can create the perception that you're a hack, fly-by-night company, not really putting into it, using a home phone number as your phone, working from your home, and that's your business address, using a Gmail address. You don't have any necessary licenses. There's all these things you could do where people aren't going to take you seriously. Or you can structure your business in a way where lenders and credit issuers look at every single aspect, and every single aspect reflects that you are a legitimate and credible real business. As a matter of fact, we can even structure your business to look like it's a really high level 7 or 8 figure business that lets lenders know that you are that credible. I'm not talking about deception. I'm talking about lying. That's fraud. We don't want to do that. I'm talking about they're looking at the structure of your overall business. And if you set this up correctly, you create this perception that you are bigger, more powerful than you probably are. And that's what we want to do here. We want to understand what they're looking for and make sure every single one of those things is beyond perfect. So that way, when they look at us, they say, wow, this is a powerhouse company that we not only want to give money to, but we want to give a lot of money to because we think they're really going to use the maximum funding that they're going to get. So first, your business has to have separate contact information, business phone, address, email address as well. You need a professional website as well. So let's talk about this. Your business needs its own phone number. You don't want to use a home phone. You don't want to use a mobile phone on a credit application. Lenders have criteria they look at to determine if it's a home phone, if it's a business phone, if it's a virtual phone. Virtual business phones are okay. Physical business landlines are okay. Home phones aren't. You can't do them. Can't use mobile phones. They'll know immediately you are, and that will get you turned down in a lot of places. Addresses. You should have a business address. You shouldn't have a home address. You shouldn't have a PO box address. You shouldn't have a UPS address. I know you may work from home, but again, we are creating the perception here that you are a massive, powerful business. So you can also tap into virtual addresses where you get an address from Regis or any number of different places, Da Vinci, for example, Alliance, and it makes you look like you're in a building, in a high-rise building in Tampa, Florida, but you're really not. You're just using a virtual address. We use a virtual address at Credit Suisse. Just the other day, somebody came to me and said, hey, like my dad has an attorney's office right down the street from you. That's a really good area you're in. I'm like, yeah. We have a virtual address there. We're not even physically at that location. And you need to have a professional email address as well. Stay away from Gmail addresses and all those kind of things. You should have a professional website set up, even if you don't need one to sell your services. And here's why. Lenders and credit issuers put these crawlers out into the world to find all kinds of information about you. You want them to crawl to your website and find everything they're looking for there. If they don't find it there, they go off into cyberspace to try to find it. Now, the minute they divert to cyberspace, you no longer control the perception. We need to control the perception they have by creating a website, by having the website be well-rounded and a good reflection of what we do with our products and services. And by doing that, that's what will make you look more credible. And you also need to have an email address that's congruent with your website. Some basic fundability stuff here. Stop using Gmail. Stop using Yahoo. Look, I don't know about you, but I can tell you that I have not moved forward with purchasing products and services from people that use Gmail addresses. I can tell you multiple occurrences where that's happened. And I can tell you that there are some of those people that have lost 6 figures in sales to me because they're not taken seriously. How can I take somebody seriously that's selling me a $3,000 package and they're using a Gmail address as their web email address? It looks shady. It's concerning. It throws up a red flag. I back out. So not only can this lose you customers, but lenders and credit issuers see it the same way. Who doesn't spend $12 on GoDaddy to get a domain with an email that comes with it? Who's not willing to spend the $12? Somebody that's not serious about their reputation. And again, you also need to get, you also need to have any necessary licenses that you need for your business as well. So once you've done these things, now you need to go to the IRS. You need to get an EIN number. Believe it or not, you don't need an EIN number to run a business. A lot of people think you do. You don't. You could be a sole proprietor and never have an EIN number. Okay, a lot of people are. Then they're out there trying to get money. But you don't want to do that. You want to have an EIN because the EIN is how the IRS in the United States recognizes your business as being a real, legitimate business. It's where people start taking you seriously. If you don't have an EIN, you're a joke. I don't know how to say it anyway. It's not my opinion that you're a joke. Don't take it that way. What I'm saying is, from a lender and credit issuer's perspective, you are a joke if you don't have an EIN. You're not serious about your business. It's one of the basic steps to take, and it's free. So who doesn't do this that's serious about the business? Not my perception. Perception lenders and credit issuers have. So you need to get this. It's free from the IRS.gov. You need to make sure you have that EIN number. Okay. And again, this is the number that's the identifying number for the IRS to recognize you as a real business. So think of it like this. How many times do you need to get credit money and they ask for your social? Well, your social is the number that's used in the United States for them to recognize you as a citizen of this country. The EIN number is the number that's used in the United States for them to recognize your business as an actual real entity. When it's not, doesn't have an EIN, then you're just not taken seriously. And it creates a ton of problems for your business. Now, I don't have this mentioned in other slides. I will mention business credit, but you also need to have a DUNS number. The DUNS number is completely free to get from Dun & Bradstreet, and it's a worldwide identifying number that shows, again, the credibility of your business. It's used by the United Nations. It's used by the Australian government, by the United States government. If you want to get government contracts, you can't even get them if you don't have a DUNS number. That's how important the DUNS number is in the United States. So get a DUNS number. It's 100% free. And just having a DUNS number, which is something 9 out of 10 business owners know nothing about, you make yourself look more credible than 9 out of 10 business owners. So get the DUNS number as well as the EIN. That way you're recognized worldwide and nationwide as being a true entity. Okay, and Virginia, hello. Thanks for coming in from Facebook. That boy, good morning. Thanks for coming in. Basic Wit says, I just started following you. I just set up my LLC and I am lost. Your channel has been a breath of fresh air, Ty. Thank you very much. I'm going to walk you through a lot of the stuff you need to do right here from a startup perspective. Bismarck Sanchez, thanks for coming in. Mike, thanks for coming in, both from Facebook. Watch Out Media. For the Da Vinci virtual business address, some offer a PMB and other locations a dedicated suite number. You don't have to have a dedicated suite number for virtual addresses. You don't. We've helped over 42,000 people build business credit. And I can tell you that we've never seen people get denied because they're sharing a suite number at a virtual office, just so you know that. And Chili says, good information. Thanks for tuning in. I'm glad to see you again from yesterday. So you must formally incorporate as either a corporation, S Corp, LLC. Okay. A corporation, C Corp or S Corp works, LLC. You could be a partnership as well, but you don't want to be a sole proprietor. You just don't. You don't look credible. And not only do you not look credible as a sole proprietor, to give you an idea of the statistics on this, you have a 1 in 7% chance of getting audited as a sole prop. You have a 1 in 50 chance of getting audited as a corporation. 1 in 7 chance of getting audited by the IRS if you're a sole prop, 1 in 50 if you are a corporation. So get a corporation. Okay, or get an LLC. A lot of people say, why wouldn't I do that? Because in California, you can get a sole proprietorship fairly cheap, and corporations and LLCs are more expensive. But outside of that, I've seen no logical explanation you wouldn't go with one of these. A lot of people ask which is the best one. Talk to your accountant and figure it out. I think it depends on your business. I don't think there is a right answer overall. It kind of depends on your business, but you can throw a partnership into this as well. But again, you want to do this, and here's why. Because not only are you taken more seriously if you are one of these entity types, but it also comes down to liability. If you are a sole proprietor, you are the business. You're one and the same. Somebody sues the business, they sue you. You're the same. But if a corporation or LLC, you're separating yourself from the business. Somebody sues the business, they're not suing you. You're separate from each other. So we want to start building a credit profile for the business. And in order for us to separate this liability, we have to separate you from the entity. If you're like this, business credit's not going to protect you. You have to separate yourself from the business. And that's very important for many different reasons, including lawsuits. I'm not a lawyer. This is not legal advice. But again, you don't want to get personally sued and all your business assets be susceptible to harm or being taken because you and the business are the same. You need to separate those two. You need to have a separate dedicated business bank account. Okay, yesterday's training, we mapped out everything you need to know about banking history, about banking credit scores. Credit scores we're not even going to talk about today. So make sure you check out our training on bank accounts. So you need to have a dedicated business bank account. Okay, but when there are many reasons to talk about this, including the fact of the importance of separating personal and business expenses, separating personal and business income. Also, it creates a lot of funding opportunities. There's a lot of funding we talked about in our webinar yesterday on bank account setup that's available just because you have revenue and manage your bank account responsibly. So this is one of the easiest types of funding is where you use your bank account and revenue to get approved. So get that bank account set up right away. There's several credit scores that look at how long your bank account has been open, and that ties into your credibility. So you need to make sure that you set up that business bank account. Okay, it needs to be open as soon as possible. Don't delay and start building a relationship with your banker. There's a lot of things that these bankers are going to help you with once you get set up. Your chances of getting approved for other kinds of loans, credit lines, other help you need with merchant services, it's all there in your bank. Our banker does a phenomenal job of even telling us how to manage our bank accounts, what accounts should have debit cards, which ones shouldn't. There's so many things that we are so indebted to our business bankers for that help us with a lot of things. You want to have that kind of relationship. Okay. And any necessary license that you need, get it. Matter of fact, necessary is a bad word. If you have a license and can get a license, get a license. We can operate in our county here in Florida without a license. It's not required, but we can go get a license if we choose to. So we get a license because there's a lot of entities that will, or a lot of lending sources or credit issuers that will give you credit just because you have a license. So Granger, for example, will give you a $2,500 credit line just because you have a business license, because that license means you're legitimate. You've taken an extra step to prove your credibility. So if you can get a license in your state, get it. If you need a license in your industry, get it. Any licensing you can get that shows that you are a legitimate, credible business, get that licensing. So why do lenders care how your business is set up? Well, first of all, these things work together to show the lender that, like I said, your business is legit, but there's actually a lot more to it. Some of the other things that increase fundability cannot be accomplished for you if your business isn't set up the right way. So for example, you can't build business credit for your business that's not set up with a separate entity, and these things are done the right way. So when I talk about fundability, it's impossible for me to not talk about business credit, because having a credit report for your business that lenders and credit issuers are seeing when they go to pull it, they always pull it, okay? But when they actually can find it and see you're established, that goes a long way to your fundability. That alone can get you approved for all kinds of credit, high $30,000, $40,000, $50,000 limit credit cards, just because you have established business credit. But there's a problem. The step one of building business credit is to improve your fundability. You can't even get business credit if you improve fundability, but if you have fundability, you can get business credit based on fundability and fundability alone. So if you do the fundability things, it's a first pre-step to help you build business credit, which then further establishes your fundability and opens up all kinds of credit and funding opportunities for you. So what other things affect the fundability of business? Well, a lot of other things do. So first, let's consider the things that may cause fraud concerns. These things are seemingly small, but again, it gets a lot of people denied. Okay, so your business information needs to be listed exactly the same every place that it is listed. This includes everything, whether there's a hyphen, well, I don't even know what the ampersand is, an ink at the end, whatever it may be. So let's talk about this. Think about this for a second. How much fraud are you exposed to in your day-to-day life, right? We get calls all the times that are scams. The people email people in our business and try to get them to get us gift cards acting like they're us. I've sold vehicles. I got all kinds of crazy fraud. These guys would send me cashier's check for the vehicle, and the cashier's check were bogus. And by the time the bank would figure it out, right, 2 to 3 weeks later, I would have already given away the vehicle and I'd be out, right? I suspected the fraud, so I figured it out. Imagine being a bank. I mean, these guys have entire organizations of people that are trying to plot on how to scam the banks. If you saw the amount of money that was actually considered to be fraudulently obtained through PPP, through COVID, the PPP loans, it's absurd, the amount of money that was caught into fraud. So banks are dealing with fraud all the time. And so their number one concern, everything else set aside, number one concern is the person applying real? Is the application, the business that's being applying real? Now, you might say, my banker and I have a relationship. They're going to know it's real. Here's the problem. Bankers and underwriters are kept separate from each other, and they're not allowed to communicate because they don't want underwriters at banks to be fed information from the front-end banker, so they separate them. I know this because the CEO here at Credit Suite, my business partner, left one of the biggest banks that's out there. I'm not allowed to mention the name, but they have a horse and carriage in their logo. I'll just say that much. Because she was so frustrated based on the fact that all these people would get denied for reasons that were easy to control if they were allowed to be communicated the reason for the denial. But the bank won't communicate the reason. It doesn't want the front-end banker and back-end communicating because they don't want to lead you as the applicant into what you need to know to get approved. That's my job today. Right. And then the other problem is that they don't want potential fraud to actually happen. So they don't disclose this. They don't tell you this information. But the reality is that the reason that applications get denied is because they think it's fraud. Their computers see all this mismatched information everywhere. And you got to keep in mind, Dun & Bradstreet, these bureaus, they pull information from Yelp, from the Yellow Pages, from your Facebook page, from your website. Their crawlers go to all these places. We wouldn't even think they get data. And if it's different data, then in their computer, it throws up red flags. So instead of a check, it starts throwing up X's, alert, alert, fraud alert, fraud alert, fraud alert. Then it goes to a manual person to underwrite it. Now, this person's handled a file that the computers, smart as they are, have said it's potential fraud, and that person's job is on the line if they trump the computer and say it's not fraud. So the minute you get in that bucket, you're pretty much going to stay in the fraud bucket and be deemed as fraud. And here's the scary part of this. They never tell you that. They never even tell you that your application is denied because of potential fraud because they don't think you're legit. They just deny you. You think it's because of your credit score. You think it's because of your revenue. They never even looked at that stuff. They denied you because your business name didn't match with the Secretary of State. So considering the following examples for a company named Stewart & Sons. Could be listed as Stewart & Sons on insurance document. Could be Stewart & Sons, the word and spelled out in the bank account. Could be Stewart & Sons Compa Inc. on the incorporation papers. But the problem is these three are three separate things. They are three separate names. So if you do this, then you apply for a loan. They see a different name on the insurance document than the bank statements, than the incorporation papers. They see it as fraud. What kind of business owner doesn't know their own name? Now, to you, Stewart & Sons, the and sign versus the word and, it's the same thing. But to lenders and credit issuers' computers, it's not. It's three separate names. Now there's all kinds of fraud concerns because let's be honest, what kind of business owner doesn't know the name of their business, right? So this is why this stuff is so important. It's oftentimes exactly why you will get denied. Now, Juan says, do you help with suspended Google My Business? Well, you got to figure out why that is. And it's worth asking Google why they suspended the account. That's my best advice with that. You have to communicate directly with Google on why it got suspended. Latasha says, thank you for everything. Thank you. And Latasha says, I was lost before joining. Great. This is what we are here to do, is clarify. And Angel says, thank you for this great info. I appreciate that, Angel. Thanks for tuning in, everybody from YouTube, Facebook, and from Instagram and LinkedIn today. So these are all examples of fraud concerns. It also goes besides a business name. Your address needs to match everywhere. Your phone number needs to match. Your website needs to match. Your email address needs to match. You change your address, you get a new location. You got to make sure that that all is updated. Your insurance paper, your licenses, your incorporation papers, everything. Okay, when we change an address, we use a service like Yext, Y-E-X-T. There's plenty of them out there. Yext is one of the more expensive ones. There's way cheaper ones. And Yext, I could change the information in Yext, and Yext changes it everywhere online. Very important as you get big, because as you get big, you are listed everywhere. Even places you don't list yourself, places that they pick you up, you're listed. You'll never figure out all the places you're listed. It could be like 700 places. So services like Yext let you change it one place, and then it changes everywhere. So if you get a new business phone number, you got to make sure that it's on your phone or on your website. It's on your social media pages. It's everywhere. It's in 411. Okay, it's on all of your documents. You'd be surprised at how much of this is not the case. I mean, so many business owners look at this and say, yeah, I'm good there, and then never check. And then they continue to get denied. I cannot tell you, so far, I think our number is 8 out of 10. 8 out of 10 of our clients that we bring that come into Credit Suite have discrepancies with Secretary of State records that are preventing them from getting denied. 8 out of 10. Okay. And they got all my free training and still came in, and 8 out of 10 have still messed up because they never took the time to look. So go to your Secretary of State and validate that your information is the same, because you change information all the time. You don't even think about going back to Secretary of State to update it. You don't think about soliciting the IRS for those changes, but you absolutely need to, as well as your insurance papers, your bank statement, your licenses, everywhere else, your web pages, your yellow pages, your social media accounts. So what lenders are looking for in financial statements? Well, they're looking for a profitable business ultimately. Okay, what they're really looking for is that your business can pay back the debt you're getting. But they want to see profit. And this is why I can tell you one of the best tips. Our accountant's job is to get us to pay as little taxes as possible safely, where we, apply, are in line with the IRS regulations and guidelines, right? But that means a lot of us want to write off everything we can, and we show a loss because we don't have to pay taxes. Woohoo, we don't have to pay taxes, right? Well, look, the reality is you show me a business with a $5,000 loss versus a business with a $5,000 profit, and I will show you two completely different kinds of funding. One is getting a 3-year loan at a 30% interest rate, and one is getting a 10-year loan at an 8% interest rate. The difference between long-term low interest rate loans oftentimes comes down to one thing. Is your business showing a profit or a loss? If you're showing a profit, then they want to lend you money and you'll get better terms. So why is that? Because as a small business, you can do all kinds of crazy, shady stuff. I'm not saying you should. I'm just saying that as small business, like when it's you don't have an accountant, you don't have all these people around you, like you can get away with all kinds of stuff. But as you build a really reputable, bigger business, what happens is you become the man. I hate to say it. I hate to let the cat out of the bag. But what I mean by that is accountants come in, attorneys come in, and they start to require you do certain things. You can't just 1099 yourself anymore. Now you got to go on W-2. All this stuff becomes legit. And it becomes harder to hide profits legally, because the reality is you become profitable. You do make money. You do make a profit. And they know that. These lenders and credit issuers know that as businesses get bigger and they get financial savvy people, that all these things are kind of in line, because now they have accountants come in and controllers, and they're looking for all this stuff. So they can differentiate between small guys and big guys, because all this stuff is in line, because big guys have professionals that help them get it in line, and small guys simply don't. It's what it comes down to. So you really need to make sure that you're showing a profit of some sort. It's a big difference in getting good loans versus showing any kind of real loss. Now, it's best if you have a professional prepare financial statements, okay, like P&Ls, like balance sheets, whenever they're going to need by lenders and credit issuers, okay, and audited financial statements look even better. Now, you might say, Ty, I don't need an accountant. I don't need a controller. That's okay. They have these people that will come in and do this as needed. Okay, so for example, one of my very good friends, Pam Jordan, and what she does is she's what's called a fractional CFO. She works as a CFO when people need her to work as a CFO. For organizations that don't yet need a full-time CFO or chief financial officer, but they do sometimes need one. So there's all kinds of fractional people in accounting, fractional people that are CFOs, that are controllers, that can get you these statements and do them right without costing you a lot of money, without hiring those people full-time into your organization. So some things to think about. Now, Silverman Fox says, hello, New Jersey in the house. I appreciate that. What's the best address I can use for my business that makes professional sense for credit? Here's the order. Great question. A real physical location is your first choice if you need one. If you don't, use a virtual address. I suggest Alliance. Go to creditsuite.com/virtual, and you'll find a quick link to Alliance there. Okay. Outside of that, home address is last resort. Never use PO or UPX addresses. That's my order of what to do and not to do when it comes to addresses. And Carla, that answers your question too. Virtual addresses, fantastic. I recommend it because you're going to change addresses potentially all the time in your business. We have a Washington office. We have a Florida office. We closed the Florida office down in COVID because we don't need it anymore. We have a PO box. We're addresses everywhere. But by having a virtual address and one address and never leaving that one address, then that will never change while everything else will change. So yes, you can use a virtual address. I think it's one of the best things you should do. Even if you have a physical location, I'd still use a virtual address because that can never change, even though your real location may change. It's not just for business financial statements. They're also going to look at personal financials too when it comes to into SBA. Are you paying your taxes on time? Are you solvent personally? Do you have money liquid? Sometimes this is looked at. Sometimes if you go as far as an SBA loan, they're going to want you to get personal financial statements. So some things to consider there. Okay. Now, if you have established business credit, the lenders are going to want to see that. Okay. They're going to pull credit with DMB, Experian, Equifax. Nowadays, they're going to look at Credit Safe, and they're going to look at FICO SBSS as well. FICO SBSS is a small business credit score from FICO that ties in with your business and your personal credit reports. But here's the problem with FICO SBSS. FICO SBSS almost does this order. It goes in and it looks if you have Dun & Bradstreet. If you don't, it goes to Experian commercial. If you don't, it goes to Equifax commercial. If you don't, it goes to personal credit. It's like looking for data anywhere it can get it down the line and ending up on personal credit. So you need to establish business credit. So FICO SBSS can pull the information from there and give you a higher score. To give you an example of how this works, if you don't build business credit, then they will go through check nothing, check nothing, check nothing. Then they go to personal credit and give you a score. To show you how damaging this is, you can never have a credit score high enough, FICO SBSS, to qualify for an SBA loan if you don't build business credit. Your score will always be so low that you can't even apply for an SBA loan without establishing business credit. So you need to establish that business credit to get that FICO SBSS score up. If you don't do that, then again, it's really tough to get approved. Second point I want to make here. Everybody's looking at business credit, guys. You're not going to go get a mortgage. You're not going to go get a loan. You're not going to go get a credit card for you as an individual without your consumer credit being looked at. It's common sense. We know that. But in the business world, they're also looking at it. You go to get a loan. You go to get a credit card. You go to get a credit line. You go to get auto financing. They're looking at your business credit quality. They're just not telling you that. See, in the consumer world, there's a law called the Fair Credit Reporting Act. And the FCRA says, if I pull your credit, I need your permission. If I deny you for credit, I have to tell you that I denied you and the credit bureau I used and why I denied you. That law doesn't apply in the business world. So lenders and credit issuers and suppliers and insurance providers, they're pulling your business credit reports all the time, and they're not disclosing how much you pay in insurance premiums is also being taken into account here as well. So a lot of things that you want to make sure that you do. Now, Frederick says, I have Staple Studio address and it seems to still get flagged. That's because I've never heard of Staple Studio before at all, but it might not be a real virtual address. If you're getting flagged, abandon and go find Regis, DaVinci, or Alliance and stay away from something like that. And I'll tell you why. There's a service called iPostal. A lot of people say, oh, iPostal. I went and got a virtual address. Well, where did you get it from? iPostal. It's not a real virtual address. It's a UPS type address. So a lot of these addresses you may think are virtual addresses. They're not real virtual addresses. So if I were you, Frederick, you might think it's a virtual address, but if lenders and credit issuers don't see it that way, you might need to get out of it. And I would suggest that you actually get with another source. It might not be a real virtual address. It might be more of a UPS type format. And here's the difference. And here's why this is important, everybody. Okay. In the 80s, what happened was the UPS and PO boxes got put into a database, and they're required now by law to be put into a database to recognize that they are basically those type of addresses. Real virtual addresses fought and won to be excluded from that. So lenders and credit issuers have a day people think are virtual addresses or not that are really PO box UPS type addresses, and then lenders and credit issuers see that, flag you, deny you. But they're not the same with virtual addresses. They're not in that bucket, which is why they don't even recognize that it's not a real physical business. I have several different credit scores on there. We've done plenty of training, so you can check out our YouTube on that. And these reports can tell a number of things: how how well the business makes consistent on-time payments. Okay, an estimation of how long the business will be able to pay based on current data, how the business ranks compares to other businesses, and a lot more. So we think of business credit reports as a reflection of how we pay our bills, but there's way more to this. Each bureau has about 5 main scores, and a lot of what happens in this world is comparing you to other businesses in your industry and how you perform. So you have to keep that in mind, because you're being compared to a lot of others in your industry, and a lot of you don't even have your NAICS code set up right. You're not even setting yourself up as the right industry. You need to understand your NAICS code. You need to make sure that you reflect that NAICS code everywhere, okay, that it asks what industry you're in. When you say your industry, you should say, I'm a software publisher. Here's my exact NAICS number, so there's no confusion. It's very important because you're ranked against other people in your industry. Now, personal credit counts as well, okay? Virtually all lenders are going to take a look at business credit, but a lot of them are going to look at your personal credit as well. Okay, some alternative lenders will just approve you based on business credit. Some alternative credit issuers will do just the same. So again, you need to make sure that you address your personal credit. Look, as entrepreneurs, we're risk takers by default. So if our credit's banged up, that's okay. Okay, I owned a company in the mortgage crisis. I went from great credit to horrible credit for 10 years and built it back up. But if you would have got with me during that time, my credit was horrible. A lot of us have similar stories of things that have happened. We take risks. When we take risks, we put our personal credit in harm's way for the sake of our business. I hate to say it, but we do that, unfortunately, a lot of the time. So if you have bad credit, it's okay. You have the right kind of spirit about you that attracts bad credit because you're a risk taker. But you got to have it fixed, guys. There's all kinds of credit repair companies out there that will help you do this, and it costs you so much money not being able to get funding or paying higher interest rates by not having good credit. So I'm a guy that specializes in building business credit. And I'm telling you, personal credit is very important when it comes to getting the money that you want to get. So you want to make sure that you establish or improve your personal credit. It's very important as well. Okay. And Charlene from LinkedIn. Hello, Charlene from LinkedIn. Is it okay that my LLC paperwork has a different address than everything else? I didn't get. No. It's not okay. You got to change your LLC paperwork. Guys, when I have you set up a business originally, here's my order to do. Make sure the company name that you want is available in the state, and make sure you can get the URL from GoDaddy, wherever you want to get it. Okay. I love GoDaddy. They're phenomenal. So I get everything from there. Once that's done, now I get the domain, I buy it. Then I set up my address. I set up my phone number. I set up my website and my email address. Then I set up my entity. That way, when I set up my entity and EIN and bank account, the next 3 steps I take, my address, my phone number, everything is set up the right way. You need to change your address and update it. And here's why, Charlene. It is the number one reason for bank loan denial. Number one. Everything I'll talk about today, number one reason is incongruency and information with Secretary of State records. It's the number one reason. They think it's fraud and it gets you turned down. So it is the most common reason that business loans get denied, which is why your Secretary of State, above all else, has to be congruent with what's on that application. Okay, and Aaron says, NAB doesn't seem to be able to currently link your financial accounts on your Equifax commercial credit reports, so the Equifax business credit score and FICO scores seems lower than they are. Well, then you go to Equifax for that. If you want to send financials, Aaron, great question. Aaron's bringing up a great point, guys, and there's a reason I answer these questions in real time and disrupt the training, because your questions hit on phenomenal points. Aaron is sitting on a phenomenal point here. And Aaron says, I get my credit reports from NAV. I can't send financial data through them to get it to Equifax. You can't. You need to go to Equifax directly, Experian directly, and DMB directly. Here's why, guys. You might not know this, but the credit bureaus have scores that they use to depict your risk based on financial information they have. If they don't have your financial information, they will put you into a different category that could be higher risk. If they don't have your financial information, this might blow your mind. Do you know what they look at to then determine your financial health of your business if they don't have your financials? the number of employees you have. It blows my mind. I don't even understand the logic in that. They go, oh, we don't have tax returns, so we'll determine financial health by the number of employees they have based on what they claim to the Secretary of State. It makes no sense to me. I still can't figure out that logic, but that's what they do. So if you're a startup or smaller business and you go put that 1 to 5 category when you're at the Secretary of State, they say no financials, 1 to 5 employees, super high risk, low scores, serious problem. So in order to fix that, if your financials are good, your tax returns, send them to D&B Equifax Experian. Aaron brought up a point here that most of you don't even realize is possible. And when you do this, it significantly improves some of your credit scores and gives you a better chance of getting approved. Okay. And Aaron said, and I just talked to you about how to basically do that. And Frederic says it's a partnership with Staples. They now offer one individual through Staples Studio, which is co-working space on the East Coast. I'm telling you, Frederic, it's really simple. If you're getting flagged because of that address, then it is not a real virtual address. It can be called the co-working space. It can be called any number of things, but it's not a real virtual address. To fix the problem, go to Alliance, go to DaVinci, go to Regis. Alliance is my best choice, and it will help fix that problem for you. Okay, other things that can be blocking your ability to get a loan. How long have you been in business? It does have an impact. Okay, lenders are more comfortable lending to businesses who've been open longer, right? So the minute you think of your business idea, set up the entity and set up that bank account after you follow that order that I told you of reasons of order that you need to set things up. Other data collection agencies play a role as well. Let's talk about 3 of them right here. LexisNexis. LexisNexis is the root of all evil. I don't mean that bad. I love LexisNexis. We have a partnership with LexisNexis. So LexisNexis, if you're watching this, I love you, I love you, I love you. But I'm just saying that they are the ones everybody's pulling data from that you don't know about. You need to get a copy of your LexisNexis credit report, guys. You need to, because it's insane. If you'll entertain me here for about maybe 15 seconds to jump off camera, I'm going to show you what I'm talking about. Credit report real quick. It's going to be worth it, I promise you. Just let me see if I can pull this up to show you exactly what I'm talking about. Okay, here we go, right here. Found it. All righty. I told you, I promise you it's going to be worth it. So, guys, this is my LexisNexis credit report. So you understand what I'm talking about here. This is my LexisNexis credit report. It's over 300 pages. Okay, I'll give you a comparison. Here's my finger so you can see how big it is in comparison, the thickness of that. Okay, this is my LexisNexis credit report. It's 300 pages deep. Every address I've ever lived at, every phone number I've ever had, every email address I've ever owned, every home I've ever lived in, the building materials for my home, the AC units, the square footage, the size of my lot is in there as well. The title company I used to close on the loan, the interest rates that I paid, the lenders that I have, every vehicle that I've ever owned in my lifetime, the VIN number for all of those vehicles, every insurance policy, and the specifics of every insurance policy I've ever had, marriage records, divorce records, children's information, bank loans you've applied for, credit that you've obtained, it's all on there as well. Every license you've ever had issued, every license you've ever had suspended is on there. Every traffic violation that you've ever had is on there, as well as every crime that you've ever committed and many other things. So now let me explain to you why it's a big deal. Okay, I'm going to give you 2 examples. We went to get an SBA loan. Okay. And the first problem we ran into was they made me collateralize my home, which doesn't make sense because the business has assets. They did it because of judgments that were on my LexisNexis credit report. They were not legitimate. They were not real. I had to go to the courthouse and try to prove that I didn't have judgments that they said that I did. I got the necessary proof. The lender approved the loan. I solicited LexisNexis, provided them proof. They removed the judgments. So that almost cost the loan and caused a 2-month delay, 2 months to get the loan because of that information on LexisNexis. Second problem. They asked that question they always asked, have you ever been convicted of any felonies, misdemeanors? And I, like a lot of you, are pretty straight shooters. So I said, no, of course not. I haven't done anything like that. They came back and said, sorry, we actually found 2 misdemeanors for you on your record. Now you need to account for what they were and why you lied to us. They literally made me write a letter of explanation on why I lied to them. This is a true story. I had to go in and pull a background check on myself because I don't even know what they're talking about. I don't even remember having misdemeanors. Now, once I pulled that background check, I realized what they were talking about. And, it was fun times in my life, right? I was like motorcycle wheelie in front of a police officer because I thought she was cute. And I was trying to, it was this crazy stuff that you do like in your early 20s, right? So I remembered the stuff, but now here I am 30 years later, still being held accountable for that. I have to not only explain what happened there and how, sorry I am and that I've never had a problem in the last 30 years. I'm writing a letter of explanation. I'm sorry I messed up when I was 21 years old, right? I guess I'm not 30 years, 25 years. And now, here is what I've learned. It's never happened again. Then I also had to explain why I lied. I didn't even know about this. I didn't even remember it. It was 25 years ago. So it was a nightmare that slowed down the process. It's why you need to get this thing, guys. It's free to get. You go to LexisNexis, you go online and type in free report with LexisNexis. You can now fill in the digital form and they'll send you this book, and then prepare to be insulted because it's the most violating thing that you'll ever access in your life. Okay. And for the record, just so you know, we have relationships with some of these agencies where when you call Credit Suite, we actually will do these checks for you, tell you what's mismatched, and help you understand what needs to be fixed so you're congruent with the records with these kind of guys, including EIN validation. These guys do a lot of things. The Small Business Finance Exchange, let me explain what the SBFE does. You might not know this. All banks openly share information with each other from the SBFE. So let's say you apply for a loan with Bank of America and you apply for a loan at Chase. What you don't realize is happening is they actually are communicating with each other through the SBFE. Everything you fill out on Bank of America's application, everything you fill out with Chase's application is fed to each other. They know it. So this causes a lot of problems because you put your income's $300,000 a year on this application with Bank of America, $350,000 a year with Chase. It's wrong. It's an incongruency, fraud concern, right? So you got to keep that in mind. How you perform on your loans, what you put on an application, all information that a bank has about you, they have to openly exchange with all other banks. That is how SBFE works. It works on what's called a give to get strategy or philosophy, which means they have to give all of the information they have to all the other banks to get all of the information that the other banks have on you. So never forget that. All banks are openly communicating with each other through SBFE. Then we have check systems. You can go to creditsuite.com/check systems. You can see how it's spelled right here, CHEX systems, SYSTEMS. That'll get you a free report. It'll get you credit score, everything you need with check systems. Check systems is a credit scoring system for how you manage your bank account. It's oftentimes looked at by lenders and credit issuers to see like how responsible you are with your banks. So they actually know your bank history. Let's look at this. Think about this. Think about this for a second. You think about this. LexisNexis, every address, every phone number, every license, divorce records, they know all that now. Now they also know everything you've ever submitted or done through any other bank. And now they also have another report and score on how you manage your bank accounts. This is just some of where they're getting their data. And so you get an idea of what I'm saying. If you don't access these things, you can't access SBFE, but you can't access LexisNexis and you can't access check systems for free and get those reports, know what's on there, dispute what's inaccurate and fix them. That's one of the things that we do with our clients. We help them get LexisNexis and check systems, and we help them dispute inaccuracies on those because they're so important to what lenders and credit issuers see. Guys, this is the stuff most business owners know nothing about. So when you do this right, you stand out like you won't believe for lenders and credit issuers. Like your chances of getting approved skyrocket, especially for getting the most money at the best terms. So these agencies collect data from everyone individually and businesses, and they do not report to lenders directly, but they do share information with insurance companies, credit reporting agencies, other members. LexisNexis is used by insurance agencies. It's also used by law enforcement. So if you want to, like get out of speeding tickets, then try to dispute the rest of your speeding tickets that are in this thing. I'm not saying that I have like a lot of speeding tickets. I'm not saying I'm not either. But what I am saying is that when they go and pull that record up, right? So you have a chance of controlling what even law enforcement sees by keeping track of this information and making sure it's accurate. And that's what you need to do because it's controlling a lot more things other than just loans and credit lines. So the timing of your application is also important. If you're applying for funds to use for growth in a recession, the lender may question this. More if you're applying for funds to get through the recession. Look, do you want to know when to apply for money? It's when you don't need it. Because when you need it and you get desperate, it's really hard to get approved because things are going badly. When things are going good, they see you as responsible, and your chances of getting approved for more money and better terms is significantly better. Guys, we've helped a lot of people, tens of thousands of business owners build business credit, and this is something we've learned along the way. So what can you do? Well, make sure you set up your business properly. Do it as soon as possible. Set up your bank account. Do all the things that we talked about today. You may not be able to do a lot about certain negative information out there, but you can work hard to make sure that there's enough positive information to offset the negative. And listen, let's be honest, you can do a lot to offset the negative. Your business credit reports, LexisNexis, check systems, all of these can be disputed and improved and fixed if you take the time to do so, okay? So very important. Before we recap here, Facebook user says, oops, I posted. You got to get rid of them for sure. Okay. And a silver. Okay. We actually went through that as well. Let me see. A virtual address. Anytime mailbox is an option. Anytime mailbox is not a virtual address. They are a post office box as well, from everything I know. So something to think about. It says, what if you have an office where I rent space seasonal from and want to use it as my business address? You can use that. But I would get a virtual address, because you're probably, if you're just using it sometime, that's probably not going to be your permanent address. You're going to have to change it everywhere, but you can do that. Absolutely. Your blood type. I'm not, yeah, they actually, I'm pretty sure that your blood type might be on LexisNexis, but I'm not positive. I actually have to look into that and see if it is. And Juan says, Ty, going through your program will cover everything. Yes, our program does all this with you through our software and with our advisors. So everything that we've talked about today, I'm not here to sell you on our program, but just so you know, this is what we're known for, guys. We're trying to be the source with SBA score that works with them to help to get people get this stuff fixed to be able to be more bankable. So we do all of this stuff. This is all the stuff that we work through with you. It's a great question, but yes. And Basic Wit says, Ty, are there any alternative payment plans for your program? Yes, there are. You want to talk about specific amounts? We do have a Genesis option where you don't work with our advisors, but it's significantly more affordable than you'll find on our website. So just give us a call. We will even work out custom payments for you. Watch Out Media says, LexisNexis, prepare to be insulted. Yeah, it's very, very, very intrusive. So again, they want to know your business is fundable. You got to set up the entity. You got to make sure your information is congruent. You got to make sure you're credit worthy. You got to make sure you know about these credit reports, access them. And if you do these things, your chances of getting approved are significantly better, because think about how many people don't do these things. Think about how much you stand out. If you give us a call, guys, there's a lot of stuff that happens. We help you get DMB, Equifax, Experian credit reports free. First of all, did you get value here? So please hit the like button. That's all I ask. Hit the like button, hit the love button, hit the share button. Give me some love, please, if you got value from this. And the other thing is give us a call, 877-600-2487. We get your Dun & Bradstreet, Equifax, Experian credit reports for free, $249 if you use them directly. We get them for free for you. We go through them. We give you tips and tactics on building your business credit. We do a fundability assessment for you to see how fundable your business is. We even have a special report that shows you all the incongruencies that you may experience out there. And then we tell you all the funding you can qualify for. A lot of people don't think they qualify for funding when they can. We're going to qualify you for funding and tell you all the money you're able to get. It all happens for free by giving us a call. If you got value from this, please please love the video, please share. It's like such a little ask. If you walked away with information from this, just help me out by doing that one thing. Okay. And like and subscribe. If you're on YouTube, click the bell right beside the subscribe button, select all so you get notified when we go live. And if you want to access our social channels, go to creditsuite.com, top right of our page. On the camera, it might be the opposite. I don't know. But anyways, you'll be able to follow us online. We have 365,000 downloads on our podcast. A whole other way you're able to get information from us, where we have experts on Instagram, Facebook, Twitter, daily tips, and all those places as well. And if you go live or see that we go live Tuesday and Thursday at 11 o'clock Wednesday, then you will also see that you can access and communicate with us if you're doing that on our social channels. We also have a great business credit building guide, creditsuite.com/live. creditsuite.com/live. If you go there, you can get a phenomenal business credit guide, been downloaded over 1 million times. So I think I have the most popular guide on the planet when it comes to building business credit. And it maps out more about fundability, more about building your business credit, and more about getting financing for your business. Okay. And I'm going to answer any other questions. Virginia says program for not fell through with paid for. Had your program failed, didn't pay? Yeah, absolutely. Just give us a call and we'll give you a credit for everything you paid to date. Just so you know, that's how we would do that. Eugene says, I'm curious, since we have to use a virtual address when we make our first purchase for a net 30, what address do we use to receive the product? You can use your real physical address to receive the product. That's fine. But you want to use a virtual address as your actual business address. Basic Wit says, always gain value here. Going to call in now, Ty. Thanks, Basic Wit. I look forward to working with you. And anybody else that we can ever help with, give us a ring. It's worth it. Our consultations, if you look at our reviews online, people rave just about the consultation you get for free. So why not? Figure out how fundable your business is. Get your business credit reports for free. See how much money you can get in programs you qualify for. You lose nothing. It's all upside. So give us a ring. Thanks, everybody, for tuning in. I look forward to seeing you on our next training where we talk about more cool things you need to know to get money for your business. Thanks, everybody. Have a great day.